Hey friends, Lucian here with the Bullish Bears team. Wanted to make this brief tutorial on showing you how to use the SPX or look at the SPX charts while day trading. It's very important when you're doing day trading to have an additional chart somewhere basically that you're able to access, whether you have multiple screens set up, having a chart on your computer that shows the SPX and what's actually happening. SPX is otherwise known as the S&P. You can have the Dow up as well. I think it's just a matter of your preference, but a lot of these stocks, these penny stocks, if you're day trading or whatever you want to call it, if you want to call them small caps, penny stocks, either way, they kind of run with the market. So if the market's going up, a lot of times these stocks will run with the market. When the market's down, a lot of times they'll go down. So they kind of swing with the market, not all the time, but kind of in general. Also, too, if you're trading like a sector like gold, gold works inverse of the S&P. So if the SPX is up, the gold and the miners are usually down. When gold and the miners are up, usually the SPX is down. So if you're trading something like these gold miner stocks, it's nice to have a chart up because it basically shows you what's actually happening in the markets. So now here's a couple ways you can do it. If you have multiple screens and you want to have a big screen set up, you can have something like this right here. This right here has the daily, what's actually happening on the daily. I also like the 5-minute chart here set up as well. Basically shows you what patterns are forming during the day. And then you could either have the 2-minute or the 1-minute over here. It's a matter of your preference. This is if you want to have a whole screen set up. This is Thinkorswim and how I have it set up over here. So obviously some people like the 1 and the 20, or I'm sorry, some people like the 1 minute with the 9 and the 20 EMAs, and then other people like the 13 EMA with a 2-minute. I kind of like the 2-minute with the 13 EMA, but that's not really that important as of right now. I just wanted to show you kind of the idea of it with one screen set up and what it looks like. So obviously when you're charting your stocks and you're looking to do some day trading, you want to look at the daily and map out areas of support and resistance, look at these moving average lines, see what's actually happening with the market. As you can see right here, you'll see a crossover here. This blue line is the 13 EMA. I really like the 13 EMA on the daily chart because it's nice for a trend line to show you what's actually happening with the market. This red right here is the 50 simple moving average. And this right here, the black line, is the 200 simple moving average. So you basically want to look at the daily and see what's happening with price action. And then, if you're going to day trade that day, you're going to see if the market's up or down. So you'll see right here, the orange line here is the previous day's close line. So, when price is below that, that means it's down on the day. So you can see the S&P is down on the day, but it's slowly starting to creep back up. If price crosses above this orange line, which is the previous close line, then it turns green. That's red to green. So it started off green to red. Now it's broaching potentially red to green. So stocks pretty much, they work either with or against the S&P. A lot of these small caps will run with it if the S&Ps are going up, but gold stocks will work inverse of it. So I'm going to show you a couple examples of it. So this is how I have it set up. I don't look at my screen like this per se. I just wanted to show you kind of how it, I have like a three chart set up on it. But this is kind of how I basically have mine set up when I'm day trading. You'll see here's Thinkorswim, multiple charts being set up. So you'll see right here, I have the SPX right over here, and I just have it on, usually I'll have it on a 5-minute time frame to see what's happening, but maybe when the market starts or opens, you can put it on a 1-minute and see what's actually happening, or 2-minute. It's just, again, a matter of your preference. The later it goes during the day, you might want to put it on the 5-minute. But it's just, again, a matter of your preference. So you can see what's basically happening. So to show you over here, you'll see some of the stocks that I was watching this morning and had my watch list. I have them more on the 2-minute time frame because I'm day trading and going quicker. So usually what you want to do is just kind of match up what's happening with the market action and see what's going on. So for instance, the S&P right here, you'll see for the, it started off red on the day, But as you can see, here's 5, 10, 15, 20. The first 20 minutes, these are 5-minute candles over here. You'll see that the market was, going up. Now you'll see on a stock like AUY, which is gold, it was trending downwards when the market opened. So you can see down here, it was trending down. Let me remove some of the drawings here. I'll move some of these. So looking over here, even though the market started off red, it fell right at first. It started heading upwards. So as it's heading upwards, you can see stocks like AUY, which is gold, were trending downwards. See the market's going up, gold was trending down. Let me put it actually on the 2-minute just to make it more kind of accurate here, just to kind of really match it up. So S&P is going up, gold is going down. You'll see too, HMY, that's a gold stock as well. This kind of was going choppy and going sideways, but it wasn't really going up. Now, it doesn't work completely accurate. Sometimes things change depending on what patterns are forming. But as you can see, when the market started, let me see, when there was a dip kind of changing right here at this 10, right around 10 o'clock, you'll see it kind of faded and started going down a little bit. So around 10 o'clock, if you go right over here, 10 o'clock, you'll start to see right around here, it came down, but it started to go up a little bit. So it kind of like the price action will start to move. You'll start to see right around 10 o'clock, little bit, let me see right here, starts to go up a little bit. So, if you're really pinpointing this down to the minute, like it just kind of goes indirectly inverse of each other. You'll see right here, at 10:42, green candlestick up, but at 10:42 down here, it's starting to go down. And now if you go look over here with actual stocks, GLUU, again, they don't work always completely the same way, but it's important to look at the market. So you'll see the market was running right here all the way up, right up until, let's say, right around this 10:02. Glue kind of went up here right to 10:02, kind of pulled back a little bit right down here. Now, sometimes it's just a pullback to go up. You have to kind of look at the charts and see what's actually happening with it. But a lot of times these stocks will run with the market. You'll see here ADAP 1052. You'll see, well, this one was just a little pullback right up here, but then it still continued forward. Now, some of them will have breakouts just because of, what's going on with the, with news or a news catalyst. But I wanted to basically show this to you just kind of in general to get an idea of things. It really works inverse with gold. That's really, if you're trading gold miners, you can see really the gold is going to work inverse of the S&P. But when you're trading these small cap stocks, if the market's in an overall downtrend, so you can kind of see, look at the daily on the SPX, you'll see it starting to kind of roll over down here. That's where you want to start paying attention to a lot of these small cap stocks, because sometimes they might get a pop up and then continue downwards. They might get a pop up and fall back down. So that's where support and resistance with stocks in general that you want to look at, but just always have a chart open with the SPX so you can kind of get a gauge of what's actually happening. Again, it's not, stocks will have news catalysts and stuff like that that can go against the S&P. So, the S&P can go on, could be going, but, or could be going down, and these small caps could be running. But in general, overall, if the market's in an overall downtrend, you want to look at these, small cap stocks and chart out the support and resistance on the daily and just see what's actually happening with them. That might be the time where you might want to go short, in more of a downtrend, or get quick scalps. So when a market's in a real downtrend, it's trending downwards, it might be harder to get the really big moves during the day. So that's where you might have to scalp for your 10, 20, 30 cents and then take your profits and get out. So when it's easier when the market's trending this 13 EMA and it's trending upwards, it's easier to ride the stocks more up. So again, it's really important to do your support and resistance, chart your stocks, look at multiple time frames. When you're day trading, use the daily, have a 5 or a 3 minute chart up, and then decide whether you want to do the 1 or the 2 minute for entries. Again, it's all a matter of your preference, but this is just wanted to show you kind of an idea here of how I have my chart set up. I look at the S&P, kind of look at it maybe in the morning, start off in a 2 minute time frame throughout the day, maybe change it to the 5 minute. Again, all your matter of your preference. Watch the patterns forming, and when the S&P goes red to green or green to red, usually something is going to happen. And look at the stocks that you're trading or watching, and just kind of watch what's happening in coinciding with the S&P. So hopefully that helped you. I just wanted to show you, kind of give you an idea of this. It's just